watching famous games on YouTube.
All right, good morning, folks, and welcome back. You know, I've started late so many times, I figured maybe this might be a good time to start early for once. And this as I reset my Thinkorswim real quick as we're talking here. But yesterday we saw something that I alluded to in the title, and I don't know if you're astute, which many of my viewers are, you probably noticed that volatility was firming up and has been for the last couple of days, even with the market either unchanged, down slightly, or up slightly. Volatility has firmed up. In fact, yesterday it was very noticeable with the E-minis up a point or two. Vol was up significantly. And this isn't usually what happens, right? The normal course of events is that volatility goes down when the market rises and it pops up when we have a sell-off. That's like the normal state of events, right? Well, here we've got something a little different. Let's pull up the VIX chart here for a second as my screen actually does nicely reload here. Let's look at the VIX. And maybe we can compare it to the E-minis here. So there's the VIX. If I go to studies, add study, compare with S&P. How about SPX? That should work. So here we have yesterday, you can see SPX rising, VIX. Let's see. So SPX kind of sideways, VIX up, right? Here, SPX up, VIX comes down a little bit, but then just sits. Here, SPX up, VIX kind of flat. So it's not super noticeable here, but it certainly was noticeable yesterday. The other thing that's interesting, that I find interesting, is with this GameStop. I don't know if this is going to show the stats, but a lot of the trade recently has been, and now this is a option statistics screen here, and we can see percentages of calls. Here we have, okay, how many calls and how many puts were traded? Well, 62,000 calls were traded yesterday, 19,000 puts. Then here's like traded at bid or below. So this is like how many people hit the bid, how many people paid the offer. You can see more people paying the offer than hitting the bid. Thus, more call buyers than sellers. And also, the most interesting part here is that the delta, when we look down here to statistics, we see, well, the majority of the call buyers were between 0 and 20 delta. So way out of the money call buying here in GameStop. Now, when we look at these calls, there's some way out of the money calls in this particular issue. And you can certainly see the case. Let's take these, not Feb, let's take the Jan 950s. You can certainly see the case why people would want to sell these 950 calls for $3-4, right? Because the case is, well, it's unlikely that this is going to get to 950. So in a sense, it's free money. You just have to wait. Now, there certainly are some people out there that think in the back of their minds, oh, this is definitely going to 10,000. But I would say the majority of people are more realistic and notice that the all-time high in this issue is 483 when there was tremendous short interest. Right now there's less short interest. Thus, for this to get to 950 by Jan, there's a case to sell these calls. But what's the case to buy these calls? Well, like I said, there's some people that think that this is going to 1,000, but I would guess that the majority of people that buying these calls are buying them based on just a shorter term horizon, in that this stock doesn't have to go to 950 for these calls to go up in value. In fact, just a pop in volatility will make these calls go up in value, or a move up, of course, will make these calls go up in value. So we don't need the stock to go to 950 for these calls to make money. And there's a ton of trade on this particular strike, though, which is fascinating because it kind of has dominated the trade in this issue for a while. And once again, you can see why someone wanted to sell these. It seems like free money. The odds of the stock going up here are not that high. We can look at the odds that the screen is giving for this stock to go up here, right? Just by looking at the delta of the option. And I have it here. So if we look at the delta of that call, it's a 6 delta. So this is giving this a 6% chance of going to 950, according to this screen. Or what that means is that 6% chance that this will be at or above 950 on expiration in 73 days. But we've seen this across other stocks as well, and more kind of, I would call meaty calls, maybe like 40% of the money calls as opposed to, 40 delta calls as opposed to 10 or 20 or 6 delta calls. But we've seen a bid for out of the money options. And we've talked about this before in this stock, how like there's a skew to the upside. When the stock goes higher, volatility expands, which is kind of, once again, going back to the theme from this morning with the VIX, kind of the opposite of what the normal course of events is. The normal course of events is as a stock slowly moves higher, volatility comes in, out of the money calls are discounted compared with out of the money puts. Now, we know that historically the skew arrived after the crash in the 80s. They put a skew into the SPX, and it kind of followed in a lot of stocks. And the rationale behind this is it is more likely to have a big event where the market crashes lower than where the market goes flying higher. It's easier to see like an immediate extreme shock event where the market goes down 50% than where the market goes up 50%. However, the call buying we've seen is indicating that a lot of people think the market is going to move higher soon. So let's take a look at the SPX and see if we can find some evidence of that there. I haven't looked at this yet, but let's look at it together. And what I'm going to do is I'm going to pull up just open interest, and we can look at our statistics once again for yesterday. And this isn't a great option strike, right? Because it looks like, oh, you know what this is that this is already open for trading for today, I believe. So we're not getting stats from yesterday, so that might not be super helpful. Let's see if we can pick maybe a different series. Well, let's look at another stock. Let's look at Tesla. Now, Tesla, certainly a crazy stock once again. And let's look at our option stats for Tesla just out of curiosity. So we've got 748,000 calls. Well, that's a lot of trade in there, huh? Ooh, it just disappeared. It must be like automatically erasing yesterday's trades. No, should have screenshotted it. Let's go to AMC. No, they must have just cleared these as we're speaking right now from yesterday for this morning. It must have been like 9 o'clock they clear. So I guess we can't look at any more stats for calls from yesterday. At least not right here. Let's look at the VIX just over the last little while and see what we've got here. So here is a year, and we can see really this kind of move down off of COVID, and the VIX just kind of off the lows. Now, although it's popped in the last couple of days, certainly doesn't look real extended, right? I mean, we're still in the lower area for recently. We saw it a couple weeks ago pop all the way up to 28, so certainly more room for this to move here. Let's take a look at the Barron's article that I was talking about in my StockTwits post, if you saw that one. So if I go to GME, and let's see what we got here. I was talking about Barron's article that was discussing the different pops that we've had recently. Let's see. Fed says meme stocks pose risks to financial security. All right, here we go. So we've got the stock market melt-up keeps going. A unique trend is emerging. The S&P closed higher for the 8th consecutive day on Monday in its longest winning streak since April 2019. Plenty has been thrown at the market in this time, including the Federal Reserve's tapering announcement and continued inflationary pressures, but nothing yet has halted the momentum. Even Tesla's 5% slump couldn't ruin the party. If the index makes it 9 days, that's if the market is up again today, that would be the longest run since November 2004. You have to go back to 1971 for the last time the S&P has risen 17 out of 19 days. So are we seeing a market melt up into the year end? Analysts at Susquehanna International Group noted a unique trend was emerging. Implied volatility levels have been moving higher, particularly when it comes to the NASDAQ, even as the index hits new highs. More significant is the increase in upside volatility. In the options market, they see investors positioning for further upside with historically high call skew priced in. That's kind of what we were talking about before, particularly for large cap stocks, including Amazon, Alphabet, Facebook, blah, 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 blah. In short, even though we're at all-time highs, investors are positioning for the good times to keep rolling. While that all points to momentum continuing, at least for now, there's no guarantee things won't eventually reverse, of course. And I have close ties to Susquehanna through my career on the trading floor. Fed says meme stocks pose risks to financial security stability. You know, it's hilarious is that there's all of these bearish articles on meme stocks as they continue to move higher. So whatever people are saying that's bearish about meme stocks, the meme stocks aren't listening to that commentary because they continue to impress and move higher. Let's see if we can contrast, color correction. Here's what we need, a little more saturation. How's that? Maybe a little more contrast. There we go. Start to look like a cartoon character. So where does this all leave us? Well, for me, I was watching AMC earnings yesterday, and earnings came out, I think, like a penny better than expected, but it was essentially what I would consider a non-event. Stock was up during the session yesterday, but it's indicated down a couple points to open today, but still the gains from yesterday were still basically, if you bought it before yesterday, you're still up money if it opens here around the 43 level, I believe. Let's see, 42, 83, 42. Yeah. So really a non-event so far. If you had sold options coming into this announcement, then you're going to be a winner today because volatility will come in a little bit with earnings out of the way and the stock really not moving a whole lot. And people could say, I did find it interesting as well that if we look at the news stories in Thinkorswim on AMC, there's a news story that says, let's see if we can find this one here. It sounds very much like it was written by a Redditor or something like that. Let's see. there's a story that if AMC breaks resistance in this pennant pattern, shorts could be toast. Sounds very much like a Redditor wrote this article talking about, like, owning the shorts or something. And it's hard to get the right size for this screen because it's so big, this chart that they have here, that it's hard to even see it on the screen. But essentially saying that if it went above this 44.50 level, then it's not coming back, which of course wasn't true at all, because we did go way above that 44.50 level yesterday and it came right back. So, these charting things are not, it's a bunch of hooey as far as I'm concerned, and people have different opinions from me. But there was all this stuff with GameStop as well. Oh, well, if it breaks out, this is going to happen. If it goes down, this is going to happen. And none of it happened the way they said. In fact, we did go down lower than the pennant, but then we just broke right back through up to the upside again. So take what you hear about charts with a grain of salt. Here we have the so-called pattern that we busted out of, and it's just not real accurate. So that's kind of what we're looking at today coming into the markets. We will see if we continue to melt higher. Certainly an amazing story in Tesla continues to unfold. Let's look at that Tesla chart for a second. Another huge breakout. Now, this has just been an amazing stock to be long, and probably will continue to be so. It seems like anywhere you buy it, you're a winner. That being said, I don't really want to spend $12.40 right here for it, but I could be proven wrong. It could go straight up from here, but it looks like it might have a little consolidating to do before the next move up, after we just ripped from 800 to 1200 in less than a month. Amazing. We'll see if I don't think it's surprising to anybody if this gives a little back to 1100 or even 1000 or 900 after that huge rip higher. And that's kind of where we are right now. What's up, Christina? Yes, I saw that article about meme stocks. Good morning. I bought 200 shares of UVXY. Well, good luck with UVXY. The article about meme stocks. There's another article about meme stocks that talks about them creating instability in the market. I don't know what the point of that article is or what it really means. I mean, it's just what's happening now is meme stocks are hot and people are buying them. And just because some number cruncher Wall Street guy doesn't think that they should be valued the way they are doesn't mean that that he's right. If people are willing to pay $220 for GameStop, then that's what it's worth. And same with AMC and these other ones. I $8,000 into $1 billion, but for every one of those people, there's 200 people that put $8,000 in, and it goes to zero. So best of luck. Be careful. All right, so that's kind of where we are right now. Best of trading for today. I am still short GameStop. It hasn't been working very well lately, right? We're back up to 220. What was it, last Monday when we got the big pop up to 255, and then it sort of rejected and went down again. To me, the chart, it's kind of moving sideways now, but it would certainly fit me if we could dip back below 200. We'll have to wait and see what happens. My position is still over 100 days out, so 3 months out. So I've got time, but if this moves to 300 and starts moving higher, it won't be good for me. That's kind of where I am. But, no risk, no reward. I'm sticking with the position I have right now. Thanks, everyone, for checking in with me today, and I will talk to you in the next one. Bye now.
You're watching Famous Dave.